Today I want to talk about where Brisbane's housing market is heading as we move into 2026. Over the past year, Brisbane house prices have delivered a standout result. According to recent data from CoreLogic, the median value of Brisbane homes increased by around $135,000 in just 12 months. That's close to 15% growth in a single year, and it happened despite ongoing concerns around interest rates and borrowing costs. What's important to understand is that this wasn't a short-term spike or a speculative surge. The growth we've seen has been driven by strong fundamentals that continue to support house prices across Brisbane. One of the key reasons behind this growth is population increase. Brisbane keeps attracting people from interstate and overseas, many of whom are looking for a better lifestyle, more space and greater affordability than the southern capitals. Detached houses continue to be the first choice for families and long-term owner-occupiers, and that steady demand is helping support higher prices. At the same time, housing supply remains tight. New construction hasn't kept pace with population growth, and established homes are being tightly held by owners. When you combine limited stock with strong buyer demand, prices are naturally supported, even in a higher interest rate environment. Government incentives have also played a role. Programs designed to help buyers enter the market have kept demand active. These policies don't just affect first home buyers, they lift overall competition and flow through the entire housing market. For 2026, the outlook for Brisbane house prices remains positive. Most forecasts point to continued growth, just at a more moderate and sustainable pace compared to 2025. Current projections point to house price growth in the range of 5 to 10% through 2026. That would still represent a strong result, especially when you consider that Brisbane houses have already reached record price levels. In simple terms, the market isn't expected to cool dramatically, it's expected to normalise. Demand for well-located houses remains deep, and many buyers are adjusting expectations rather than exiting the market altogether, as buyers realise the longer they wait, the more they will pay for that same property. Smart buyers are making decisions now. Affordability is becoming more challenging across Brisbane's housing market. Many buyers are now focusing on middle ring suburbs where they can still secure detached homes with land, good access to schools, transport and employment hubs, and solid long-term growth potential. For homeowners, this environment is positive. Strong demand and limited supply mean quality houses are still attracting competitive interest, especially when priced and presented correctly. For buyers, it reinforces the importance of strategy, suburb selection and timing, because waiting for a major price correction may mean missing further growth. From an investment perspective, Brisbane houses continue to benefit from tight rental conditions and population growth. This combination supports both capital growth and rental returns, making houses a compelling long-term asset in this market cycle. So what does all of this mean for you as we head into 2026? If you're looking to buy a house in the greater Brisbane area, the data suggests that getting your strategy right rather than trying to time the perfect moment is key. If you already own, the outlook remains supportive, with further price growth expected over the next 12 months. If you're sitting on equity in a current property, why wouldn't you use that to increase your assets towards retirement? I'm Geoff Tomkins from GCT Property. If you'd like personalised advice on how this market applies to your situation, you can book a strategy call using the link below. Thanks for watching, and I'll see you in the next update.